New feature for us, Eye on Abu Dhabi with Abu Dhabi Finance Week just on the horizon. We're putting the spotlight on the biggest industry stories shaping the UAE capital. That might be from finance and innovation, energy, tourism, maybe even petrochemicals and beyond. And every Tuesday, we'll explore the developments driving Abu Dhabi's growth, hear from the people powering its progress. One organisation, Borouge, the Abu Dhabi-based petrochemicals company and a manufacturer of polyolefins, is a joint venture of ADNOC and Borealis of Austria. The company, of course, has been well established in Abu Dhabi for many years and recently posted some very impressive numbers. Company's third quarter net profit jumping 52%, $295 million. That's going to put a smile on the face of the CFO of Borouge, Jan-Martin Nufer, who's been kind enough to join us live on the line for this first feature. Jan-Martin, really appreciate your time. Thanks for joining us.
Thank you for having me. Thank you.
Extraordinary results, especially in light of the fact that the global polymer prices are currently soft. They're continuing a bit of a downward trend around many parts of the world. How do you quantify what drove such a strong quarter for you here?
No, look, we are very pleased with the results, as you have been saying, with the net profit that we have been posting with 295 million. That is an excellent result in a still quite soft market. There are a couple of factors which drive, that Borouge is the most profitable company in our polyolefin space. And that is on one hand that we have been achieving a record volume of production. So we have been having a planned turnaround before. Now we're back on track. We have been producing above nameplate capacity, 1.4 million tons. This is a record and serves as the basis for selling, the volumes that we need to achieve these impressive results.
You mentioned there, Jan-Martin, that you hit record production levels yet again. How close are you now to design capacity? You're still a way off.
So look, we're currently producing right now over 100% of design capacity. So that's an impressive result. It's a testimony to the young age of our asset fleet and how we're running our operations. Again, that serves as the basis. You need to produce, but afterwards you also need to sell it in the market. That has been working out very well again in this quarter. And hence we're achieving rates that are above nameplate capacity already now.
Numbers looking good across the board, none more so than margins, 39%. They are up there, if not the highest, then certainly one of the highest in the industry worldwide at the moment. I mentioned that the polymers and the polyolefins industry is a little bit soft in other parts of the world. How sustainable are those margins for you in this current market?
A very good question. So first of all, the 39% EBITDA margin that we're achieving, if you compare that a bit to the peer group that we're looking at from our side, that's above 3 times higher than what you would see in the market. The reason for that is that we're having essentially 2 main advantages with Borouge. First of all, an excellent cost position. That comes from the, on one hand, economies of scale that we're having run of the largest petrochemical assets on the globe. And then we have, on the other hand, also our price premia. And that comes back to your question, where is that quality price premia coming from? It's essentially a price premia that our customers are paying for the superior product qualities that we're having based on the unique technology. And this is what we're driving on our sales performance to make sure that we're getting this premium across the market. And we're, again, if you look at the 9 months that we have been seeing now in 2025, above the guidance in terms of that premium. We're saying usually our customers paying approximately $200 per ton polyethylene more than you would do for a comparative product, and $140 for polypropylene. That serves as the basis on us to make sure that we get the best pricing in the market despite a soft environment.
A lot of analysts pointed to the fact that a lot of this capacity and the boost in production there is down to the successful and, of course, ahead of schedule turnaround of the Borouge 3 plant, which came online earlier on this year. That's obviously helping at the moment, but already we are looking at the Borouge 4 expansion. Can you bring us up to date of how far in terms of completion you are with Borouge 4?
Absolutely. Look, it continues our quite impressive growth story. If you look back where we started, in the beginning, end of the 90s with 450 KT of production, now about 5 million tons. Borouge 4 is across the corner. I'm very pleased to report that we're above 90% completion. Once we have Borouge 4 online, it will be the largest integrated petrochemical site on the globe. We got to go to 6.4 million tons. So you have a very visible growth that will be complemented and also with some planned debottlenecking, which will bring our production capacity to approximately 6.6 million tons.
Yeah, Martin.
So very good progress in there. So first production lines will already come on stream at the end of this year.
Looking forward to that. Yeah, Martin, just a quick one. Obviously, this is an Eye on Abu Dhabi feature. You are very much at the heart of manufacturing and industry in Abu Dhabi. How important is the growth for the company, not just for Borouge, but also for the capital's diversification and, of course, the made in Abu Dhabi mark that industries are now using the world over?
No, absolutely. Look, I think the unique feature that we're looking up in terms of the growth portfolio is that with Borouge, you have a very visible growth story, and that's rooted in the Abu Dhabi environment. We are very proud part of the ADNOC value chain. We're working together with a lot of our fellow group companies in the ADNOC network. So that's deeply rooted in the success of Abu Dhabi as an industrial place. Now, the good thing, as I said, you have on one hand a very tangible growth story on the Borouge side, and let's not forget we're also on the verge of having the proposed transaction with Borouge Group International, which will essentially look to form the absolute global petrochemicals powerhouse in the polyolefin space. So that's also well on track. We're looking then beyond the borders of Borouge in terms of the next global expansion that is planned subject to the regulatory approvals. But, it's progressing well.
Well, we will let you get on with that progress, Jan-Martin Nufer, but we are always on hand if you'd like to let us know when it is signed, sealed and delivered. Yeah, all the best with that merger reshape and the future plans as well. And congratulations on those latest numbers. That's Jan-Martin Nufer. He's the CFO of Borouge. Eye on Abu Dhabi.